Welcome back, everyone. We have an update from RedCloud Technologies, which is a private company providing AI-powered technology that removes barriers to fair and profitable trade in emerging markets. Please welcome its Chief Investment Officer, Sukhvinder Gill. Nice to see you, Sukhvinder.
Oh, Anna, good to see you again. And thanks for the introduction. As Anna said, I'm the Chief Investment Officer at RedCloud. I joined about a year ago. I was previously at the SoftBank Vision Fund, where I was an investor and responsible for deploying several billion dollars there. Thank you, Anna, again for inviting me, and we can crack on.
Wonderful. So tell us a little bit about what RedCloud is and what is open commerce.
Yeah, well, RedCloud is a business-to-business open commerce platform. It digitizes, connects, and transforms global distribution chains. Essentially, we connect brands, manufacturers to distributors, and subsequently to the retailers, all in one platform. This provides for efficiencies and transparencies in that supply chain. The platform is AI-driven. It provides real-time data and valuable, actionable insights to brands, distributors, and retailers. RedCloud operates in the fast-moving consumer goods space. That's your everyday shopping basket: milk, bread, biscuits, sugar, wheat. Probably a lot of your listeners might be surprised to hear, I certainly was when I found out about this, that 90% of B2B trade is currently offline. You know, that's due to the sort of legacy and disparate technologies, which has meant that trading between manufacturers, distributors, and retailers is almost entirely offline. Trade is conducted through inefficient manual processes. Orders are placed by paper, Excel, phone call, WhatsApps, and payments are often made in cash. And that's in the B2B space. You know, like I said, it's largely untouched by technology. So what does this actually mean? For brands and manufacturers, there's a lack of visibility and market access. They are not able to scale efficiently. For distributors, the disjointed and manual sales process means that they face challenges expanding their retailer network to drive additional sales. The reliance on legacy solutions and manual processes means that distributors do not have the ability to influence and expand their retailer demand. Distributors operate on thin margins, typically sort of 3%, 5%, and operating offline really eats into this margin. For retailers, being offline means that they do not have access to the majority of brands, distributors, or special promotions. You know, again, retailers operate on very small margins. Especially in the emerging markets, retailers often have to close their shops, you know, their kiosks, to go and place orders directly with the distributors. You'd think that sort of traditional e-commerce was the solution for this. Well, it's not. It actually makes the situation worse. Traditional e-commerce is centralized. And what that leads to is predatory practices, controlling practices, and this benefits only the big tech providers. They end up owning all of the data, and they try and own the entire supply chain. There's a very well-known B2C operator that's sort of guilty of this. I mean, ultimately, this kills small businesses. Well, RedCloud's open commerce involves the creation of a decentralized, trusted digital network that connects these manufacturers, these distributors, and these merchants, irrespective of their size or location. I mean, what open commerce is about, it's about creating a free trade platform where retailers have the choice, distributors can scale, and brands can get real-time visibility on their trades. Brands and manufacturers gain access to real-time order usage data to create demand forecasting, intelligence, and targeted marketing through machine learning and AI. How does it benefit distributors? Well, they're able to sell more. They're able to reduce their costs by automating sales, identifying target retailers with real-time transaction and behavioral data, and the ability to send tailored promotional campaigns to retailers to drive higher order volumes. I mean, traditionally, this has sort of been untargeted billboards, flyers. With our use of our AI in RedCloud, this can very much be targeted. For retailers, the RedCloud app streamlines the order, pay, and restock process. Retailers can now browse, compare, and buy stock instantly. They can gain access to global and local brands. They can earn commissions from digital subscriptions and get instant access to financial services such as microloans for restocking.
Well, thank you for that overview. Can you talk a little bit about your growth? You've experienced phenomenal growth since commercialization about 18 months ago. So what do you attribute to that?
Well, thank you. RedCloud sort of started commercializing March or April last year. So that's about 18 months ago. We used Nigeria as our beachhead market. This was followed by South Africa, Brazil, and Argentina. So from that standing start 18 months ago, we've reached a run rate total transaction value, that actually means the value of the goods sold on the platform, of $1.3 billion in September 23. That produced a $22 million run rate revenue. The revenue is generated from the transaction value. We have a take rate model where we charge a percentage of the value of the goods transacted on the platform. In that time, almost 250,000 orders have been completed on the platform. Just looking at the sort of projections, you know, we see this sort of hyper growth continuing. We have very good sort of revenue visibility. Our pipeline is solid. You know, even if we didn't sort of continue to sign distributors and brands at the same rate, you know, we have excellent sort of revenue coverage. So by March 24, we see the run rate TTV as being 2.5 billion, and that would give a corresponding run rate revenue of around 50 million. Sort of 3 years out, or 2.5 years out, by March 26, we see a run rate TTV of 19 billion, and that would give us a run rate revenue of 550 million. Well, I guess the question is, why does RedCloud, why is the platform seeing this hyper growth? Well, it's the first platform of its kind that is not here to create new distribution chains. It empowers existing trades with technology. That's the key here. We are digitizing existing trade flows. We are not creating a new market, but empowering an existing one. So like I said, RedCloud's platform digitizes existing B2B FMCG trade flows that were previously offline. Globally, that's an $8 trillion market, with about 80% of that being offline. RedCloud's open commerce approach means that all participants in this supply chain, you know, the manufacturers, the distributors, and the retailers benefit. The platform does not disintermediate any of the players in the supply chain. This has meant adoption and usage of the platform has been rapid. So, you know, just a statistic for you, our net dollar retention is around 300%. There have been people who have tried to do something similar. These players have, in the main, attempted to become super distributors by trying to disintermediate the supply chain. We believe at RedCloud that this is not the right approach. It's not a sustainable approach. A lot of this was sort of funded by VC dollars. You know, they compete on price and they're CapEx heavy. I'll just talk a little bit about the three participants in the supply chain and how they benefit from using RedCloud's open commerce platform. Firstly, the retailers. They gain access to a much wider range of inventory and pricing. And it's particularly important in emerging markets, they can start building their digital profile. And once they have a track record of success, they have the opportunity to engage with financial services providers such as inventory financing, you know, to help them grow their businesses. You know, a lot of these retailers in the developing markets, they're unbanked. Our platform has a payments network, so you know, it kind of solves a lot of problems for these smaller retailers. The distributors, you know, distribution is democratized. Any local distributor can pitch, has the opportunity to pitch and trade that comes in from retailers. They can reach an increased number of retailers. Because trade is now digitized by the platform, paperless and cash. Cost and time to market is reduced. For the manufacturers and brands, well, open commerce is very much a game changer. It provides them with instant access to local new markets, millions of additional merchants inaccessible via their existing supply chain. As products are sold, they get to see the data on how and where their products are being sold. It provides a level of granular insights far surpassing what they currently had.
Well, I would also like to combine two questions. I know you mentioned you're in 4 markets, 2 in Africa, 2 in South America. So quickly, why did you choose those markets to launch? And is there an opportunity outside of emerging markets?
Thank you, Anna. Yes, as you said, we're currently in South Africa, Nigeria, Brazil, and Argentina. The platform, the technology is actually already developed for 40 other markets. So there is very much an opportunity outside of these 4 markets. And, you know, we are exploring opportunities in the adjacent markets. But to answer the first part of the question, why those 4 markets? Well, in terms of B2B trade, you know, we strategically chose these markets for sort of 3 factors, really. They were appealing in terms of population size and demographics and GDP. More than 500 million people are covered by those markets. You know, GDP is increasing. These people are increasingly needing and wanting to buy these consumer goods. The second reason being, I mean, globally, the B2B commerce supply chain is fragmented, but in particular in these economies it was. You know, trade was almost entirely being conducted offline inefficiently. There are a huge number of distributors and a huge number of small retailers in these countries that, you know, would benefit from being connected on our platform. In our 2 African markets, for example, Nigeria and South Africa, there are over 16,000 distributors and 700,000 retailers. In our 2 LATAM markets, Brazil and Argentina, there are over 80,000 distributors and almost 1 million retailers. The third reason we chose these markets as our first 4 markets, they have young populations. Cell phone penetration is very high, despite them being emerging markets. And, you know, these populations are very much open to trying new technologies. You don't always see that in the Western world. I mean, I live in England and I spend quite a lot of time in the US. And when I travel to sort of some of these emerging markets, I'm surprised at how much ahead they are in terms of some of the technology that they adopt. The other thing to think about with these 4 markets is that the size of the FMCG markets in these geographies alone is $340 billion. And that represents a $5 billion revenue opportunity for RedCloud. The other factor to sort of think about here is that the largest global brands have not been able to successfully penetrate emerging markets in the same way that they dominate in the developed countries. So, you know, I'm talking about the Unilevers, the Gillettes of the world. Their market share is much lower in these countries. So, you know, as an example, in categories such as sort of hygiene, consumer health and food, the larger players only have approximately half the market share in emerging markets that they do in developed markets. So it was a great way for sort of RedCloud to bring these kind of players into these markets.
Well, Sukhinder, we are out of time. I will send you the rest of the questions so you can come back again with a full presentation, because this is fascinating stuff and we'd love to have you back in the near future.
Thank you, Anna. Pleasure.
All right. Thank you so much for your time. All right, everyone. Thank you so much for joining us today. We had a very full day of a wide range of growth companies from all around the world, and we thank you so much. This is only day 1. We'll see you back here tomorrow morning, 9 a.m. Eastern time for day 2 of our Super Virtual Investor Conference. Thank you all for watching, and we'll see you tomorrow.